Hello guys, so we are now in Korea, in Seoul during Korea Blockchain Week, and here with you Anna Tutova, co-founder of Coinstelegram, and our guest, Powell, who is co-founder of Maple Finance. It's the on-chain marketplace for institutional and accredited investors to find different lending opportunities in tokenized assets. And tokenized, real-world tokenized assets is quite a hot topic right now. According to the report of Boston Consultant Group, this market can swell to $16 trillion. So Sid will tell us how he embraces this market and how he started his company and so on. So great to have you here, Sid.
Thanks, Anna. And 16 trillion is a very large number.
Yeah.
But hopefully we can get close to that.
So can you tell us about your background and how did you generally get into crypto blockchain space?
Yeah, sure. So I used to work in banking in Australia, and so I was doing what you call securitization. So this is like lending to lending companies. And after doing that for a period of time, I was working at a fintech lender. And there's kind of like, there's a lot of project management involved in this. And after doing that for about 12 months, I had the idea with my co-founder to build a marketplace built on the blockchain for this. So that's the ultimate goal of Maple, is to build a capital market on top of the blockchain to help mostly innovative companies, so think like new industrial sectors, tech sectors, to borrow through the blockchain.
Nice. So it was mostly from the capital market side, or did you hear about Bitcoin, cryptocurrency much earlier?
Yeah, it's interesting. Unlike most people who come into the crypto space, I actually didn't start with Bitcoin. So it was around 2018. So I was working at this finance company, and I started learning about smart contracts. And so what I was really interested in was this idea that you could have self-executing loans that were managed by code. So it was around mid-2018 we started researching who's doing lending on the blockchain, what could you do with capital markets and banking. And so I read a lot of white papers then, and then early 2019 we started to write our own white paper for Maple. Now the initial idea for Maple was a little bit different to what it is today. It was mostly about bonds, tokenized bonds on chain. But as we realized that the space was so early, we saw that we would need to do the lending ourselves and facilitate a marketplace for that. And so that was kind of the idea that evolved into Maple. And then it was mid-2020 that we kind of relaunched the concept, raised capital for it, and then started building it. But how Maple works today is we have pools that people can deposit into. So our clients are generally high net worth, funds, DAOs, crypto startups, and they deposit into these pools to earn interest. And then on the other side of the pools are institutional borrowers. These might be trading firms, could be fintech lenders, and they're taking out loans in stablecoin. And to date, so since we launched in May of 2021, we've done around 2.2 billion in loans. So it grew relatively quickly.
Yeah, that's great. And from your lenders and borrowers, are they mostly crypto native lenders and borrowers?
They do.
Well, traditional ones?
It's a little bit of both. So when we started, it was mostly market makers and market neutral funds who were borrowing through the platform. And so they would definitely fell into the crypto native category. And more recently, so this year we launched a what you would call a real-world asset lending pool. So this was in partnership with a firm called Accru, AQRU, out of the UK. And that one is lending to a fintech originator, but they're sitting in what you call the real world or outside crypto. And so that firm is called Intero, and they're a specialist lender, but they're lending exclusively to firms outside of crypto. So they lend to small businesses. So let's say you've got a restaurant that wants to open up a new venue, and so they want to put down a deposit. So they might borrow from that pool. So they're borrowing through DeFi, but ultimately the use of funds is the real world. So it's helping smaller businesses to grow and helping create jobs in communities.
And why do you think for the crypto lenders it will be interesting to give the assets to traditional businesses?
I think the main thing that people get out of real world asset lending is it's non-correlated. So if you're lending to crypto native companies, then you're kind of a little bit dependent on the crypto cycle. So if markets are up, market makers want to borrow, market neutral firms want to borrow. But when markets are down, there's not as much lending appetite, and also the credit risk is higher in those periods. And so by lending to real-world asset firms, then you get a non-correlated exposure. So they're not likely to suffer difficulty or have higher risks of default when crypto markets are, in a more bearish cycle as we are today. And then also it gives a higher degree of diversification. So you could lend to firms in, let's say, like this accrue pool is mostly firms in the US, but it's pretty spread out across the US. So you're not really taking a geographic concentration risk. And then what we've found today is those types of loans tend to be higher yield. So if you're lending to crypto native firms today, it's probably around maybe 8 to 11 or 8 to 12%. But the yield on the accrue pool at the moment is about 14% net of all fees. So higher yield, it's pretty good in terms of real world asset lending. That'd be one of the highest yields out there.
And how many pools do you currently have?
At the moment, we've got about 4. So we've got one doing this real world asset lending. We've got another one doing cash management, which is like tokenized T-bills. And then we have our the legacy pools, which are doing market maker loans. And then just 3 weeks ago, we launched a pool doing secured asset lending. So this is over-collateralized lending to digital native firms. But where that pool differs is that it has an integration with a custodian. So we can take collateral, could be BTC native, could be wrapped ETH, but we can take that at a custodian. It's not rehypothecated, so it's safer than a lot of the CeFi lending firms from last year. But those are our kind of 4 key verticals that we're doing at the moment.
And for which pool do you have the highest demand currently?
Currently, it's neck and neck. So the highest overall volume at the moment is the cash management pool. So this is a startup might have raised seed or Series A, and they want to get a yield on that, the Treasury funds, but the yield has to be very low risk. So that's where T-bill collateral comes in, and it's also got to be very liquid. So they have to be able to get their funds out the next day if they want. And so that pool is the preferred one for the startups and DAOs, and that's about 26 million at the moment. And it helps if you think that if you're a startup and you raised let's say 5 million or 10 million. If you raise 10 million, you're getting about 480,000 in interest a year on that. So it's pretty good. It helps you hire an extra 2 or 3 developers depending on where they are. But the other pool that's doing pretty well is the accrue one. So the interest in that has grown about 6 million in the last 3 weeks. So that's definitely the fastest growing pool that we have.
Yeah, that's cool. And you as well recently raised 5 million to expand on Asian markets. So congratulations.
Thank you.
So can you tell more about this and your plans here in Asia? Yeah,
for sure. So obviously we're here today at Korean Blockchain Week, and then next week I'll be in Token 2049 in Singapore. And so for us, Asia is a very exciting region because of the new the regulatory clarity that they're getting in Hong Kong and Singapore, and also a lot of the I guess the support from more institutional firms now in these markets. So we see it as an area that was kind of underpenetrated by us before. We always had a decent number of borrowers coming out of places like Singapore and Hong Kong on Maple, but what we wanted to do now is have more clients on the lending side of the marketplace, so depositing capital into these pools. And so part of what I'm hoping to do on this conference tour at the moment is start to foster some of those relationships, tell people about Maple. We met when I was speaking at an event last night, and I think family offices and high net worths are a very good set of clients for things like, effectively what Maple is kind of private credit on chain. So capital protection, which is good in this type of market, income. And so those types of assets are pretty interesting to family offices and high net worth clients. And so what we want to do is start to build some relationships on the ground. We're potentially looking at hiring some people out of Singapore or Hong Kong in future as we expand the team too.
And if you compare American market and here in Asia, so what differences do you see and how different is the interest?
Good question. I would say in the American market, you already have kind of a higher level of penetration of products like private credit. So it does tend to be more fund-based rather than family office-based in terms of digital assets. And so generally you're dealing with professional managers who might be already familiar with private credit. And they also have a lot more different opportunities already. So it's kind of competitive from that perspective. Here, the market, I would say, is more based around family offices. So I'm trying to establish or tap into more of that network, and also the interest in asset classes tends to be they want sort of higher volatility, like just exposure to Bitcoin or exposure to tokens, and on the other side, so that's kind of the more speculative use case, but on the other side, they tend to be very conservative and favor real estate and let's call it much safer or lower volatility asset classes. So what we're trying to do is assess the level of interest in things like private credit and try and pitch that to family offices. So I'd say, different kind of investor appetite and also different investor demographics.
And as well, these assets you raised for microfinance, do you use your own pools like cash management?
We do,
tools?
actually, yeah. So the Maple Treasury has around 2.5 million in its pools. So predominantly it's the Treasury, so cash management, because that's more suitable to startups who have raised capital because of the low level of, or the high level of protection from Treasuries being 100% collateralized, and the high level of liquidity, so you can get funds out in 24 hours. So what we've done is we've put assets in the cash management pool, and then we're also starting to use some of them in the new secured digital asset pool. So those loans are always over collateralized by BTC or ETH or wrapped staked ETH, and so again that one's relatively.
So that's Maple Direct? Or?
That's Maple Direct, yes. So that pool, we did the first loan out of it about 3 weeks ago. We're looking to upsize that loan. We've probably got another 3 to 5 mil in the pipeline for the next couple of weeks. But that one pays, after all fees, around 8.5%, and the loans are all over collateralized with BTC or ETH. So versus other DeFi options, price is much higher, and for like a comparable or lower level of risk given the over collateralization. But if we were to put our stables in Aave or Compound, for example, which is the same concept, over collateralized, but in many cases, I guess with less liquid collateral, and you're getting about 2, 3, 3.5%. So much better pricing, and then much less smart contract risk and better collateral.
And do you have currently uncollateralized or under-collateralized loans? So now
at present, there's a couple of those remaining. So there's some which were a borrower from last year who's continuing, and those will be rolling off in the next couple of months. I think the under-collateralized product will continue, and I think there's definitely space for it. So if you look at the largest market makers in the crypto asset space, and none of these are particular clients, but if you look at firms like Jane Street or Susquehanna, Tower, all of these firms would generally borrow on an or under collateralized basis. And so to remain competitive for them, you have to offer that type of product. Now, generally is going to get a higher yield than the over collateralized loans, and that's compensating you for the risk. But also these firms are extremely large, and so they're actually much lower risk than a lot of the firms who were borrowing under collateralized in the space in 2021 and 2022. So I actually think there will be a market for those firms. I think there are plenty of high net worth or family office or fund clients who would like to take that counterparty risk. And of course, if we do that out of Maple Direct, it would be in a separate pool so that it's not with the over collateralized loans, and it's a very specific kind of risk. And then we'd also always be assessing the borrower's balance sheet on a monthly basis and monitoring the financial health of that business, so that we can minimize the risk of any defaults and make sure the lenders are getting a good result.
And how are you different from other tokenization and on-chain marketplaces like Centrifuge or Goldfinch, Clearpool?
Centrifuge. So taking each of those in turn, I think each of those products is very good, and as one of their peers, I want the overall space to grow. So I would say probably we're closest to Centrifuge in that they have multiple different verticals. So they do real-world assets on chain. They also have the Treasury bills product that they're doing in partnership with Blocktower, which I think is called Andromeda, and so they've got multiple different verticals. Goldfinch is more real-world assets, generally with a more emerging market focus. So we have a little bit less overlap because we tend to target more like US and Europe as the real-world asset markets that we would lend into. But again, I think those guys are doing a great job. They're very diversified. Clearpool mostly does market makers and is primarily uncollateralized loans at the moment to those market makers. So I'd say what we have in common is we like each of those segments. What we do differently is we're targeting multiple segments. So we have real world assets, we have market maker loans, and then we have T-bills, tokenized T-bills that we're doing as well. And I view my preference has always been for a portfolio approach, so that if somebody is on Maple and they want to go to a lower risk product, we've got the cash management pool. If they want higher yield, higher risk, they can go direct. And then if they want real world assets and higher yield, they can go into the accrue pool or something similar.
And do you plan to offer as well some other new products like tokenized real estate, or you mentioned yesterday intellectual property rights, copyrights?
I'm always looking for new products that are out there. So tokenized real estate is something that's been talked about since 2017 or 2018. I think it will 100% come, but the reason it got talked about so much is that it's the largest asset class in terms of debt overall globally. But that also means that it's currently kind of the best served globally. And the duration on real estate loans and mortgages is extremely long. And generally that's helped through the financial system because banks are able to borrow at such a low cost of capital from depositors and benefit from FDIC. It's difficult for us to put like a 30-year asset on chain or even like a 3-year asset. So that's why I think real estate will come later. But we are actively working on supporting a couple of projects at the moment. So I'm talking to one originator out of the APAC region, and we're looking at could we do like 1 or 2 year finance for that. I think generally what I see coming on chain first is going to be more like shorter dated things. So accounts receivable, trade finance. These are high yield, good collateral backing, good counterparty risk, and short dated. So generally it's going to be 3 or 6 months. What I would say is kind of an intermediate run is some of these Web3 native use cases. So like tokenized copyrights was something I mentioned last night at the presentation. And what I like about this is that it's Web3 native. So it's not an asset class that somebody could get elsewhere. And one of the interesting projects working on this at the moment is TRIPS. And so what that is it's effectively you tokenize the royalty stream for like a YouTube creator. And so there's a number of these people who are increasingly earning their income from being creators online. And since that just becomes ultimately a financial asset, there's no reason you couldn't finance against it. And so I'm talking to somebody who's looking at creating a credit strategy for that. So I'd be really excited to see something like that take off.
Sounds really cool.
Yeah. And also you look at audit firms. So audit firms take their payments generally now in stable coins. And so I don't see why you couldn't do something like working capital loans or accounts receivable factoring. So if they invoice a few projects for 100K, let's say, there's no reason you couldn't factor that invoice and say lend them 90 or 95 cents on the dollar depending on how long it takes them to get paid.
And can you as well share some upcoming plans for Maple?
So we're currently going through a governance vote for V2, and so that vote will take place next week, or actually from this week and into next week. And so that includes some new tokenomics, but also a recapitalization of the Treasury. So we're excited about that. It helps extend the resources for the Treasury beyond 2025. So 2025 is when the current funding round lasts until, assuming no revenue, but hopefully there is more protocol revenue coming through. And then we are working on another pool that's quite exciting with a financial institution based out of Europe, but also with ties to a big bank in Asia. So I'm very excited to hopefully reveal that in the next couple of weeks. And then the other one is just growth of Maple Direct. So from the start of the year, we really had to, I wouldn't say pivot, but reestablish the relevancy of lending on chain, because people went very risk off around loans to market makers. And so that's where the real world asset lending has come in. So things like the accrue pool, Maple Direct doing secured loans. So I'm excited that hopefully we'll be able to announce other partnerships there on Maple Direct. But that's really the prime focus for us over the next few weeks.
And as well, you mentioned that you will have possible cooperation with some APAC banks, but we see a lot of other banks like big players, JP Morgan, HSBC, etc. They're working on their own tokenization platforms, and as well in JP Morgan already tokenized bonds. And
they have.
cross-border transactions and etc. So
Yeah.
do you consider them to be competitors? So can you cooperate with them somehow, or is there any interest from their side to cooperate with them?
I think, we would of course love to cooperate with any of the large banking institutions. I think, they have huge balance sheets. They bring a lot of strong reputation, and so that could definitely help spearhead adoption. I look historically though at this innovator's dilemma. Like where has an incumbent in one technology threshold or paradigm ever made the leap successfully to a new one? Mm-hmm. You look at it most recently in electric vehicles. So like none of the incumbents really made that successful a leap, and Tesla was able to emerge. And same with e-commerce. Like it wasn't Walmart that successfully made the leap, it was Amazon that kind of emerged. And so I think I focus mostly on the emergent players, of which we are one. I think traditional finance firms would do well to partner with emerging firms instead of just thinking that they can build it themselves, because a very different set of technical capabilities. And also, those organizations are set up, they're oriented around revenues that are largely based on this traditional model. Mm-hmm. And so if JP Morgan's getting most of its revenues from traditional banking, and then somebody internally creates a new settlement layer that cannibalizes those revenues, the organization has antibodies that are just going to, they're going to block the new blockchain settlement layer in JP Morgan from really being successful and getting off the ground. And it's very difficult for a large organization like that to incubate a new and successful department. So I'd love to partner with them, but I don't worry as much about those firms being competitive just because of the difficulty of launching new technology there. So I think, I think the best route is cooperation and partnership. We would love to tokenize assets of large financial firms and potentially work with them so they could lend through a Maple pool into assets that they're comfortable with, or we could look at assets they've already made loans against and put them or house them in a Maple pool.
Yeah, that would be interesting to see. And how do you see the current institutional market? Did you have more transactions and activity during the bull market, or do you see the big growth now?
Tough question. Definitely more transactions during the bull market. So I would say peak was kind of March of 2022. So at that point we were around 965 assets deposited on the platform and doing a run rate of around 250 million in loans per month. Mm-hmm. Now we have clawed our way back to around 52 million in deposits on the platform, but this is up from about 16, 17 in, call it February, March. So I think we've done a good job of repositioning the platform to remain relevant today, launching Maple Direct, launching the real world asset lending pool. And so I would say volume's definitely picked up over the last month. If volume in May and June might have been, let's say, I don't know, like 5 million. Now what we're seeing over the last 3 weeks is we've done over 10 million in new originations. And so I think it points to a growth trajectory in the broader market. And so we're able to kind of ride that beta. But also what I'm seeing now is more interest from funds in real world assets. So we receive a lot more interest now in lending into like the accrue pool, the tokenized T-bill pool, so Maple Cash. And I expect that to pick up and continue an upward trend in the second half of the year.
And in your opinion, what would be the catalyst for the next bull market, and what should happen so that more institutionals get into the industry?
Yeah, very, very difficult to predict the catalyst, but I would say if we look at past market cycles, there's generally a funding side catalyst. So 2017 it was ICOs, 2020 it was liquidity mining and token launch pools. I think the catalyst is, I'm looking at kind of late 2024, 2025 in terms of when the bull market might resurge. I think you have to have a macroeconomic condition. So this would be easing by the Fed potentially. The US economy, I think, has kind of performed better than people expected, although recent indicators indicate a little bit of weakness. But if we saw kind of easing of conditions by the Fed, and if we saw something like, let's say, a funding side trigger, like a lot of interest in real-world assets on chain, just as one particular example. And so a lot of money comes on chain for that. I think that could be a catalyst for another bull market run.
Yeah.
I tend to think though you also need a lot of retail participation just because of the size of crypto in for a bull market to really take off.
And do you personally invest into altcoins? Or
I
maybe
do. I've
shares
definitely been
have-
burned and rugged in altcoins and liquidity mining pools in the past. So, and with a bull market, with the current bear market, times are tight. So I'm definitely focusing less on kind of side investing and more just trying to concentrate 100% of the brain activity on Maple. But in the past, I've done NFTs, altcoins, and I've also done other like liquidity mining pools and things like that. I think what I'm most excited about and what I'm seeing a lot come through at the moment is VCs talk a lot about infrastructure at the moment. So I think that probably means it's peak time not to do infrastructure. Infrastructure is definitely overbought.
Yeah,
And I would,
so many roll-ups.
every week I speak to probably 3 or 4 new L1 or L2 roll-ups or L1 alternative EVM chains. I expect there's actually going to be thousands of chains in future and have very specialized purposes. I think now though I'm looking at it and I'm saying every VC I talk to tells me how much they dislike DeFi and love infrastructure. So I'm saying, okay, sell infrastructure, buy DeFi. And so I would be looking, if I were an outside investor, I would, and definitely not financial advice, but I would probably be looking at like DeFi teams that are kind of grinding through this bear market. So I'm not talking like soft rug DAOs where nobody's really doing anything, but teams that are consistently shipping product and kind of grinding through this market. I think those will be interesting things where if they survive and are able to show traction, then by the time the next bull market rolls around, I think those would do very well.
Thank you for sharing your thoughts with us.
No, you're welcome. Happy to join. Appreciate the questions.